Welcome to Trader TV. I'm Dan Barnes. In 2020, we've seen buy-side traders become price makers more than they ever have before. Joining me today are Graham Cox and Nicolas Masso, global co-heads of UBS Bond Port, to discuss how they've seen this phenomenon occurring on their platform. Graham, Nico, welcome to the show.
Good to be here, thank you.
Thank you for having us.
How have you seen the effect of heightened volatility affect your clients?
I think the buy side really has changed the way they've come about trading. The buy side has become proactive. The days of relying on the dealer community to warehouse risk and provide liquidity are gone. It has become really expensive and really cumbersome for dealers to maintain pricing on screens. I think there's been a draw to from pricing. I think the amount of orders that we have seen left with the desk has certainly grown exponentially versus 2019, for example.
I think the diversity of clients engaged in electronic trading has broadened significantly.
Yeah.
Traditionally, it was reserved to certain sectors. I think a combination of the volatility and people having to work from home has expanded that diversity.
Bond Port has been counter-cyclical with the buy side. When liquidity was great and volatility was low, Bond Port was a good tool to have, but certainly not the only way to find liquidity.
Yeah.
That counter-cyclicality made that in market events, we spiked tremendously. Now, over the last, if you look about 10 years, the markets have been fairly quiet. But over the last couple of years, we have become cyclical as well. The buy side has come to realize traditional dealers are not everything. The big credit houses, the big, larger investment banks in the world are no longer the sole market makers. You have the quants, the ETFs, the data-driven systematic market makers. All these guys are providing prices on screens in size in the same way that larger institutions do.
And how's that engagement with electronic trading helped them?
The buy side has felt the need to have more access to electronic prices, to be able to see and be a bit more autonomous in the finding of liquidity. We have, on our side of the business, almost double in the last year and a half the number of unique users trading with us. The hedge fund community has doubled. The buy side community is up 30%, and that path continues throughout 2020.
And so what is Bond Port actually doing to make that engagement happen?
I think Bond Port provides equitable access to all participants on the platform. It really standardizes access to liquidity.
Yeah.
It gives buy-side or traditional liquidity consumers a distribution platform to access clients globally. We operate 24 hours a day, 5 days a week through the same order book to execute those trades that the traditional counterparties have not been able to.
Mm-hmm.
And once a client has success at a new way of getting trades done, that becomes really sticky.
Simplistically, we empower clients to become market makers or liquidity providers. Traditionally, the distinction between liquidity providers and liquidity takers has been very firm, and we're trying to blur those lines. And I think if we look back to March and April, not only did we see the traditional liquidity takers turn provider, we saw the traditional provider turn taker. So the benefits aren't necessarily just to the buy side. Our sell side participation has also increased significantly, but I think the behavioral shift has been much more significant on the buy side.
We offer very unique technology that allows any participant to real-time monitor global liquidity through smart order routers and algos and be able to get a counterparty to the trades without having to worry about time zones, about client tabs, about credit lines.
How would you characterize price improvements for clients?
I think quantifying price improvement remains incredibly difficult, particularly in the credit markets. That was massively exacerbated in the March volatility that we saw. Bid offers, particularly in the go-go names, the situational names, blew out significantly. Looking for a traditional source of liquidity in such a name, in such volatility, the dealer, they have to price for that liquidity. It's just a natural evolution of the market. In that situation, what we try to do and what the platform does is to allow clients to become liquidity providers rather than takers.
In order to be truly unique, you need that buy-side engagement, and only an engagement from the liquidity taking perspective, but the liquidity provision perspective. Now, convincing a buy-side or a hedge fund to be proactive and showing the hand in size on a screen to be able to get executed passively, that not only requires technology and time, but a change of pattern and behavior from the buy side.
And if I were a buy-side head of trading and I were looking for complementary liquidity because perhaps my counterparties might be a bit more risk-off towards the end of the year or due to the volatility around the US election potentially, how can they engage with you to improve their execution today?
I think that's one of the benefits, the flexibility and accessibility, if you like. From a simple Bloomberg terminal standard license, you can interrupt both as liquidity taker and liquidity provider. We have an internal UBS Neo platform that gives you slightly additional functionality. We connect to some of the OMSs, the EMSs. We have API connections. We see ourselves as providing complementary liquidity, not necessarily alternative liquidity.
Aggregation of data by the buy side is definitely a trend that we see growing. We offer some data products, fairly new, that we have recently about the bond port flows, pre and post trade data. And I was surprised when we launched the product. I always thought it would be more the quants and the hedge funds asking for it. And it's very traditional buy side tier one asset managers that are knocking at the door and asking, hey, can I have access to your data?
Nico, Graham, that's been great. Thank you.
Thank you, Dan. Enjoyed it.
Thank you very much, Dan.
I'd like to thank Graham and Nico for their time today, and of course you for watching. To catch up on our other shows or to subscribe to our newsletter, go to tradietv.net and etftv.net.